Hi, to chat with us. Relaxo Footwears is in focus. The company has reported a good set of Q1 numbers. The top line growth is 10 to 11%, but the profits have jumped up by 46%. Margins too have inched up to 14.6% as raw material costs have softened. To discuss the numbers and the way forward, we are joined by Ramesh Kumar, the Managing Director of Relaxo Footwears. Mr. Dua, morning, and thank you very much for joining in. This is Rima here. So the first question is on margins. We've seen a pretty smart improvement in margins, but your current margins are still lower than the margins you used to enjoy a couple of quarters, years ago. At some point of time, your margins were even 17%. Do you anticipate getting back to margins? What's the margin guidance?
Yeah, last year the materials were very, things have gone beyond around very expensive, and we had to correct the prices. So now our demand is coming back, our growth has started looking, volume numbers are improving, and now by and by the way our old high cost inventory is getting consumed, our margin has also started improving. And this quarter you have seen the improvement, it has gone to 14.6. Next quarter again I am expecting that it will further improve, maybe around 16% we will reach next quarter.
You will get to 16% margins in Q2?
Yeah.
Okay, got that. That sounds very positive. Coming to the growth for the full year, since you're telling us that, now volumes have been picking up as well, what is the kind of growth that you expect for the full year for FY24?
It is going to be a double-digit growth, maybe a little better also. But presently, the way things are, double-digit growth is sure.
Okay. Sir, could you guide a little bit more about volumes? As you pointed out, volumes have recovered. Your volumes in the current quarter are up 34% year on year, but they're down 2% on a quarter-on-quarter basis. And I think the number is 51 million that you've shared. What's the guidance on volumes for Q2, Q3, Q4? What are the trends?
In quarter 2 also, our volume will be growing around 30%. And fourth also thing will improve. But in the quarter 4, that is January to March, then 30% I don't expect, because already the effect of volume sale was started coming in April, February, March quarter. So, but overall, I think more than 20% growth of volume will be for the year, maybe 25%.
Okay, got that. Sir, realizations, they have been falling. It's not just a trend seen in this quarter, but over the last couple of quarters. I mean, for a pair of shoes from an average pricing of about, I think, 170, it's down to 145, yeah, below 150 now. So what is that telling you in the market? Is there a lot of pressure at the entry level, and what is your own expectation on pricing and realizations for the coming months?
We have to be very competitive in the market, and because of fall of the prices of the raw material, so we had done the correction last year. As a result, average price has gone down. But overall, because volume are increasing, our market share is increasing, the shelf space we have got back, our share in our trade has improved. So overall, business is going to be healthy. Looking up, profit will also improve. Overall, in turnover, in value term, is also improving, and it is going to improve. So we are having a very competitive position in the market at the time being.
Okay, that sounds quite good, and it sounds like demand sentiment also seems to really be picking up. Coming back to your revenue, if you could just take us through the breakup again in terms of what is the kind of growth that you're seeing for the mass market, what are you seeing in the premium side of the things, and also for the different categories, whether it's shoes, whether it's slippers, whether it's sports shoes. If you could just give us a little bit more color in terms of what's happening with the revenue breakup there.
Share of business in our Hawaii segment, where we are selling under the brand Relaxo and Bahamas, it is around 25%. And then other two brands, Flight and Sparks, They are around 35 to 7%, 37%, 37% equally divided, depending upon the season we are in. Today it is summer season, January, April, May, June. So sale of open footwear is more. In the next quarter and other, closed footwear will have more share in the business. So that is the way things are between the different categories. Growth of this open footwear like our EVA slippers, our Hawaii slippers, Bahamas, because last year they were the most affected. There we are getting high growth if you compare it with other categories.
Mr. Dua, out of time. Thank you very much for joining in. Look forward to another conversation with you as the quarter progresses. That's Relaxo Footwear for you. In Q1, volumes have come back, margins have improved, and the company is guiding for a 20 to 25% volume growth for the full year as well. Look at the way the stock has moved up post the interaction with us. It was in the red, now it's back in the green. Getting to a break. On the other side, tech